Hello, and welcome to Money Mondays, powered by the Joseph Business School, where you can tune in every first and third Monday of the month to hear a new money topic. Be sure to subscribe to the JBS YouTube channel and share these podcasts with your friends and family. I'm your host, Jill Thompson, and on today's podcast, we're going to talk about a very exciting topic. Today, we are discussing investing. Remember, our theme for this year is breakthroughs. Breakthroughs in our finances, breakthroughs in our thinking, and especially on today, breakthroughs in our investments. For many of you, you're probably like me. You're saying to yourself, I love to hear the topic like investing, but I often leave the discussion still not knowing the next steps or even how to begin. You may be a person who thinks you need a lot of money to start investing. Or if you're that someone who has thought about investing in different assets and instruments, but don't yet feel comfortable making a decision without proper counsel, then you have tuned into the right segment. The Bible tells us in Proverbs 11:14, where no wise guidance is, the people fall, but in the multitude of counselors there is safety. I don't know about you, but when I think of counsel, I want the best. And I want to learn from those who have mastered what they teach to others. I hope you're getting excited about what you're about to hear today. We've put together a great investment podcast with you, the viewer, in mind. So buckle up, hold tight, and get ready as we dive deep into the exciting topic. Here, to put it all in perspective, is an expert with more than 25 years of financial experience, Catrice Wells. Catrice is a graduate of Oral Roberts University with a bachelor's in finance, and she has quite a financial pedigree. She has worked as a stockbroker for A.G. Edwards & Sons, one of the largest and oldest brokerage firms in the country. She was the head stock trader and mutual fund coordinator for private held money manager Lou Holland, who was a regular panelist on CNN, CNBC, and Wall Street with Lou Rukeyser. And she also was a research analyst for Zacks Investment Research. Catrice is a Christian and has a passion for studying and investing in the stock market. She is the author of the book, When Heaven Went Public, which has been described by experts in the finance and Christian church world as a profound and life-changing revelation. Catrice has managed million and multi-million dollar high net worth client portfolios. She founded her own FINRA and SEC member firm called Johnson Well Investments. Throughout her many years in the investment industry, she has been a popular television and radio correspondent and the host of various stock market programs, including Chicago's UPN television program, The Stock Market Observer, Ask an Expert. Ms. Wells currently hosts her own investment TV show, Wells Street. I love that name, which airs on channel 62 WJYS in the Chicago area. If you have not written down her name yet, please write it down now. Catrice Wells. Guys, I promise I'm going to try to stay as quiet as possible for much of this podcast because there's so much information that Catrice has to offer us. And I want to make sure that in our time together that she pours out all her wisdom nuggets. Without further ado, Miss Catrice Wells. Welcome, Ms. Wells.
Thank you, Jill. Glad to be here.
I'm glad that you're here as well. So we're going to actually start opening up our podcast with discussing the interesting title of your book, When Heaven Went Public. Can you explain the concept behind the title?
Sure. It's a concept that God gave me. God gave me that book. And it's based on the idea that God actually created investing and that Wall Street copied his idea. So whenever, we have a business idea, you want to start open up a store, whatever idea you have for a business, you need money to fund it. Okay. So what you can do is, of course, is incorporate. And whenever you incorporate, people invest money in the company, and then you give them part ownership of your company. You give them shares. So if you're incorporated, you have the ability to offer shares to people.
Okay.
Now, if you can control who invests in your company, that means it's private. Like sometimes you just have your friends and family invest because you want control of the company. You don't want someone to take over. So then you can also go public. And the stocks that we see trading on CNBC going across the screen there, those are publicly traded companies. So that means anybody can invest.
Got it.
Well, that's God's principle. Because whenever he wanted to build his kingdom, heaven, he actually offered it to Abraham. We invest our lives in the kingdom of God. So we are actually shareholders of the kingdom as Christians. So he uses our lives to build his kingdom. Now, first, of course, heaven was privately held because he offered it first to Abraham, who was considered a friend of God.
Okay.
But then the Jews, when they rejected the idea, he actually sent Jesus Christ to do a public offering on the cross. So heaven went public. So that's where the concept comes from. And you know, when you have a business idea and you do incorporate, you do need a board of directors. And it should be an odd number. You know, you have a chairman of the board. The chairman presides. You have a chief executive officer. You have a chief operating officer. Well, heaven has that too. God is the chairman of the board because he presides over the earth. And then Jesus Christ will be the chief executive officer because whatever we want is executed in his name. And then the Holy Ghost will be the chief operating officer because we operate under his power. So heaven has an odd number too, and he has a chairman of the board and
Wow.
a chief executive officer and a chief operating officer.
That's a very, very different revelation that I've never heard before, and I'm so intrigued. I'm definitely going to read about this because as you were speaking, it made such sense. It's like I could truly see the structure of the corporation, that the 3 tier actually make up the board, and that we are the shareholders.
Right.
That's absolutely powerful.
Yeah, and when you have shareholders meetings too, if you're incorporated, and so that's like church. We have shareholders meetings where we vote, where we say yes, Lord, yes to your will, that your will be done. We're saying yes to what the chairman of the board wants to do with his kingdom.
That's awesome. So don't miss any more of your shareholder meetings on Sundays and Wednesdays. Now you see how essential and important they are to us advancing the kingdom.
That's right.
But to go and touch a little bit more about you professionally and with your career, can you share a bit about some people you have maybe helped with their personal finances? I know you've managed millionaire and multimillionaire and multi-million-dollar portfolios. Can you talk a little bit about that?
Well, one of the most exciting things for me majoring in finances, because finance touches pretty much every industry. Every industry has a financial side to it. Even churches, you have to have money to run a church or Starbucks, whatever you're running, you have to have money. So I've been able to help a lot of different people because finances are a part of pretty much every industry. So if even from just millionaires, even to people who are just starting out really small, a lot of my clients have been people who left a job and they had a 401k or some money there that they needed to roll over. You hear that term a lot, roll over their money. So I've helped them, and I've had athletes, professional athletes who have been clients.
Wow.
One of my clients was actress Lynn Thigpen. She lived in New York. Whenever she did a movie, she sent a check, and we would do the investing for her. So one of the things I pride myself on is I always try to offer advice that's trusted and provide good service. So I just try to distinguish myself that way, someone that you can actually trust. So I'm open as far as who I help, and it's a very rewarding type of career.
That's good. And so when you talk about you're open to who you're helping, it kind of brought us back to a previous podcast that we did before where we talked about some statistical data that talked about that 39% of Americans, according to CNBC, only have a savings in order to write a $1,000 check, and that 80% of the current U.S. population is living paycheck to paycheck. What do you say to a person like that may be on the fence about investing because they just feel like they don't have enough or they don't even know where to start? What advice would you provide that person?
Well, what's happening is that people have kind of lost the habit of saving. They're more into borrowing, and so if you're borrowing, that means you are spending more than you're bringing in. So it's a matter of reining in how much you are bringing in, and then controlling how much is being sent out. So you have to reduce one or increase the other. So either reduce what you're spending or increase what you are earning. So what's happening is people are borrowing a lot, and they're not really in the habit of savings. Now this is a principle too of the kingdom. Whenever you give your life to the Lord, He cancels your sin debt. Forgive us our debts as we forgive our debtors. So basically, your net worth is what you own minus what you owe. So if your debt is canceled, that means your net worth goes up. So when we give our lives to the Lord, He cancels the sin debt. And so if you have love, He cancels the hate. So you become basically debt free. So your debt is not working against your net worth. So it's the same as in the financial principle, where you want to reduce your debt and increase your assets, what you own, and your financial soundness. Increase that amount. So what's going on is that people are really going into debt, and so not really saving. And the way to avoid debt is to save. Save up money, and you should have at least 3 to 6 months worth of savings set aside. So how much should you save? It should be like, if you take your salary, say you make $30,000 a year, divide that salary by 10,000, whatever it is, divide it by 10,000. So if you divide 30,000 by 10,000, that gives you 3. So you should have 3 months worth of savings. Now the more you make, say you make $100,000 a year, divide that by 10,000. So it gives you like 10 months, because a higher paying job takes a little longer to get. So you need more savings just in case you lose your job.
That's good.
Yes, so you save up. Now, prayer is like our savings account.
Okay.
That helps us to avoid sin debt. When we're prayed up, like, people don't pray like they used to, like they say. People don't save like they used to. So you have to control your debt and control the cash flow, making sure you have more coming in than you have going out. But you should immediately try to save $1,000 for emergencies, because you just don't know what may happen. And people usually go into debt because some sort of emergency comes up, or they go bankrupt because they end up with so much debt. No matter how much money you make, sometimes people just keep spending. And so you want to make sure that what you own is greater than what you owe.
Okay. And so that just talking about a level of discipline with our finances.
That's right.
Okay. But you know what? Another thing I want to talk about is, I know when people typically think about investing, a good question always people tend to ask is it a good time to engage with the market? So from your expert opinion, what would you say?
Well, one of the wealthiest individuals in the world is Warren Buffett. He always says, people always ask him that question. And he always says, whenever the market's open, it's a good time to invest.
Okay. So there you go, folks. There's no bad time to ever invest in the market. It's always a good time. As long as the market is open, it's a good time to begin investing.
That's right.
So for someone also who may be at the bottom of the totem pole, where maybe their finances, they may be that person that can't acquire $1,000 in savings, I know typically most financial advisors tell them to begin to start with their Roth IRA or their 401k with their employer. Can you talk a bit about what is a 401k and what is a Roth IRA and what's the difference?
Okay. Well, IRA stands for Individual Retirement Account. And anyone can go open one of those up at a bank as long as you have a job. And now 401k is the retirement account that your company that you work for will offer you.
Okay.
Both of them offer the advantages of a tax deferral.
Okay.
Now, with an IRA account, you pay the taxes once you start taking the money out. And so it allows the money to grow tax-free. Same way with the 401k account that you're offered at your job. Now, the Roth is something that's newer.
Okay.
The Roth allows you pay the taxes before you put it in. And so if you say you save up money and over the years it grows to a substantial amount, no matter how much it's grown, you don't have to pay taxes on what you've made on that account. So it's a nice option for retirement.
Okay.
And so, God actually has a 401k plan too. Tithing is like God's 401k. Because, when you have a 401k, you take a certain amount out of your paycheck, whether it's $50 a month, based on what you made, like let's say it's 10%, and you put it in your 401k. It grows tax-free. You do it monthly on a regular basis, and it builds up. Well, same way with tithing. If you make money, you give God 10%. He says he'll rebuke the devourer. Now, taxes is a devourer, right?
Yes.
Yeah, works against your earnings. So he said he'll rebuke the devourer, and plus God matches you. He said, "Give and it shall be given unto you."
Yes.
Yeah. So he matches you just like your corporate company that you work for. Like you say, you give 3%, and they'll match you. So that allows it to really grow. So the same way with God, he has a 401k, a retirement plan too. So he matches us when we tithe, and he is like a profit sharing.
That's awesome. I was thinking about when you were talking about God matching us, I was thinking about the scripture where it talks about, and he'll give unto some 30, 60, and 90 fold.
Right.
I was like, oh my goodness, I could see the total employer match
Yeah.
in this whole corporation. This
Exactly.
this is a very interesting concept, people. If you're really not catching this, you got to make sure you get this book, because there is definitely a correlation between how things are working within the kingdom and the topic of investing and how it even works with our faith.
Right.
I'm quite excited about this. So what would you say, let's talk about stocks and bonds. That's something everyone likes to talk about, but not just stocks and bonds. There are so many different asset classes out there right now that people are kind of either researching or they hear others talk about. So we've heard about stocks, we've heard about bonds, we've heard futures, Forex, options. Can you talk a bit about those?
Yeah, there are a lot of things that you can invest in, but a good way to start is to get a financial advisor. Now, you can do it on your own, and you may save money doing it on your own, but having the professional advisor that has the training and they're in it, full time, and they're watching the market, and they'll do a risk assessment to see where you stand. How would you handle certain situations? Would you be nervous about this? Would this investment keep you up? A financial advisor can do an assessment for you and then create a plan for you. And they say that people who have financial advisors usually make more money because the financial advisor keeps them accountable. It's kind of like that with Christians. Sometimes people say, well, I'm just going to have church at home. They're just going to do it on the internet. They don't want to give no money to the pastor. So they save money by doing it at home and doing it on their own. But when you have a pastor, he keeps you spiritually accountable.
Yes.
And he has special training, and he can oversee your growth.
Yeah.
So it's kind of the same principle. So you should start maybe with a financial advisor to find out what's the best for you. Because it depends on how much money you have, how much you expect to come in the future.
Yeah.
What are your specific goals?
Yeah.
So you need someone to kind of go over that with you.
Yeah.
And so that's a good way to start. But if you just want to start right away, your 401k account would be a great place to start because you can put a small amount in. And over the years, it's kind of been shown that people who have a 401k accounts, they really can accumulate a lot of wealth over time. And a lot of millionaires that we see today have come from people investing in their 401k. And I think the key there is that they put the money in and they just leave it. And they continuously add money to it as they get paid. So they're adding money even when the market's down. So they're buying stocks at a lower price.
Yeah.
So therefore, they have a greater profit. So over the years, that can really, really add up.
Yeah. And and as you were talking, I thought about something that you said, which I definitely want to reiterate in this time, which is she said that typically most people who have a financial advisor tend to make and generate a lot more money than a person who does not, which kind of goes back to our scripture we talked about in the beginning, in the opening, that in the multitude of counsel there is safety. You do not have to do this by yourself, nor do you have to be in fear of trying to even figure out how it's supposed to work. Get a financial advisor, have an accountability partner. It keeps you accountable to your goals and what you have for your future, but it's their responsibility to make sure that you stay on track, that whatever you say you want to do, you'll definitely be able to do it.
That's right.
So I'll ask you this, is there any particular stock that you would recommend?
Yes, there are several, but one of my favorites is Microsoft.
Huh.
That's a name that's well recognized. It's a blue chip stock. I don't know if everybody knows what a blue chip is, but
Can you tell us what blue chip is?
A blue chip stock is a company that's name recognized. They've usually been around quite some time. They're a leader in their industry. They have good earnings, and so Microsoft is one of those stocks. Right now, it's going for probably $112, I think, today. The price target over the next maybe 4 to 5 months is I think 125. But I actually think in about a year and a half it may go to about $200.
Wow.
Yeah. Now what makes it a good stock too is that the price of the stock compared to what it's earning, I think is kind of low. That's called the PE ratio. That's one of the key components that you look at to determine whether it's a good investment. So the price of the stock compared to how much the company is earning per share. And then you also look at beta. Now beta is generally it's 1.0. That's beta. Now that measures the volatility of the market, how much up and down you'll see in the overall stock market.
Okay.
Now Microsoft's beta is right at about 1. So if a stock's beta is above 1, that means it's a little more volatile than the rest of the market.
Okay.
If it's under 1, that means it's less volatile than the market. So Microsoft is pretty much right at about 1, and it's actually, now I'm saying buy it, it's a good stock at 112, but I actually was buying it maybe a year and a half ago, and it was only 50. So it's doubled over just like about a year and a half. So but I think it's going to go much higher. So.
And so if people want to do more research on identifying stocks to potentially invest in, would you recommend that is there a particular place they can go to find out information about a company?
Yes, Investors Business Daily is a very popular, or I should say a good newspaper to read. There's also Value Line that gives you a good valuation on companies. It gives you a price target. It tells you a lot about the company, who owns it, what products they make. So Value Line is a publication that you can use. Now, a lot of people, if you're buying individual stocks, that's higher risk.
Okay.
Because you're maybe putting it in one individual company, and that company could go bankrupt. Any company could go bankrupt. You just never know what could happen. Now, but the way to avoid or minimize your risk is to buy a mutual fund.
Okay.
So a mutual fund is just basically a group of stocks. It's a bunch of stocks into one account. So you get a fund that has Microsoft inside of that particular mutual fund.
Okay.
Like Fidelity. Fidelity is a company that you can is low cost. You can do it on your own at Fidelity.
Okay.
They have a Fidelity blue chip fund, and Microsoft is in there. Google, I believe, is also one of their higher holdings. Google, Facebook, those companies are growing, but when you put it in a mutual fund, you have all those different companies, it reduces your risk. And with the mutual fund company, you can invest a smaller amount, like you can just put $50 a month in an IRA, just open up an IRA at a bank. IRAs are usually opened at banks, and then the 401ks are usually at your employer.
Got it.
So if you go to a bank, you can say, well, I want to open an IRA, maybe put in $25, $50 a month into a mutual fund, and they could build up over time.
Got it. Would you say that it's more cost effective to try to invest in a mutual fund versus trying to purchase an individual stock by itself, or purchasing multiple stocks? So is it just a matter of risk, or is there a cost factor as well?
Mutual funds have different ways that they charge a customer.
Okay.
There are no-load funds, meaning that you don't pay an upfront fee.
You heard that? No upfront fee.
But then you don't really have, usually you don't have a financial advisor.
Okay.
Because when you pay a commission, you're not really paying to buy the stock, you're paying for the advice.
Okay.
You have someone that's going to be watching out for you, calling you, saying, this is what's going on. Just like, say the market went down 500 points, like you're kind of panicking, you have somebody to talk to.
Yeah.
So that's what you're paying the commissions for, because you can actually just go directly to a company.
Okay.
And buy the stock from them without any type of commission.
Okay.
But so if you go to an investment firm and there's a commission, you're really paying for the professional advice, someone to kind of hold your hand and look out for you, do a financial plan. So that's where the cost really is coming in.
Got it. And so mutual funds, I know typically where I've seen mutual funds are within my retirement account. And so typically you see they have targeted funds, they have maybe small cap, some large cap. Would you recommend a person sitting with their retirement advisor to kind of figure out where maybe if there is a mutual fund within that set that's already in their retirement accounts, that they can maybe just target their funds there?
Oh yeah, sure. That's one way to do it. The growth funds are usually, for an investment out 5 to 10 years, Then you have aggressive growth, so that they will be investing in more companies that are more, they're not as maybe established, or high growth. Like Microsoft is still, would be considered, I think, aggressive growth, but even though it's been around a long time, aggressive growth usually means a little more risk. But if you're in a mutual fund, we believe we've ever had a mutual fund go bankrupt.
Got it.
Because there's so many stocks inside that fund, the whole country would have to go under.
Okay.
For you to lose all your money in the mutual fund.
Got it.
That hasn't happened. So going just with with a growth fund, if you're trying to plan for retirement, that's a good way. Name recognized companies like Fidelity. American Funds is one of my favorite mutual fund companies. The Washington Mutual Fund.
Okay.
I think it's been around since 1952.
Okay.
And the growth in there has just been really consistent. Usually if the market is down, it's not down as much. If the market is way up, it may not be up as much, but it's going to probably be up. So it's been around a long time and has a really good track record.
Okay. And when you say market, so let's talk to the novice, someone who knows nothing about the industry. What is the market?
It's a supermarket, like a grocery store, where you can go buy different things. It's a place where you can buy stocks.
Okay.
Now, things are becoming computerized. It used to be that the markets were a place where you have the traders on the floor, They're doing the hand signals. When it's this way out, that means they want to sell. When it's this way, they want to buy. So that's kind of going more towards just being computerized.
Okay.
But it's just a place where you can buy a corporation. You can invest in a corporation. So.
Okay. And what's an index? That's another word we've heard people talk about.
Well, the Dow Jones Industrial Average is probably one of the most popular ones. It's 30 different stocks from different industries, and most of them are all name-recognized companies that you and I have heard of. So when they say the Dow Jones Industrial Average was down, or the market is down 200 points, it doesn't mean the whole market. It just means those 30 stocks, the leading companies in their particular industry, they're down, a certain percent, and so not everything goes down when the market goes down. So there are defense stocks, or like say Johnson & Johnson. When the economy's bad, people are still going to buy Pampers, for their babies.
Got it.
So there's so many things you can buy and invest in and build a portfolio. You shouldn't really buy, I don't think you should buy individual stocks unless you have at least 100,000. If it's less than that, you should probably go with a mutual fund for diversification purposes.
Got it.
But I will say that the millionaires in the world, the billionaires, like the Bill Gates, the guy who owns Amazon, the Walmart family, they have made their money in one particular stock.
Really?
And that's how people have made millions, because they put it was all in one. So it's like putting all your money into your business. That's what they did.
Yeah.
And so they made a lot of money. So their wealth is tied up into the value of their stock. And so now, if you want to take that risk and put it all in one, you can, but you have to be prepared to lose all of it, because it could go under. So it's the same way if you open up your business. You put all your money, you take $100,000 to open up a restaurant. You could lose it all. But what if you do make,
What if you make a lot of money?
Right. So it's the same concept with investing. It's not gambling. It's investing when it comes to the stock market.
Got it.
You are investing in a company. Don't buy stocks that you wouldn't, want to own personally. People sometimes come to me and they say, well, what about this marijuana thing? I personally don't sell. I wouldn't be selling marijuana, so I don't invest in those stocks.
Okay.
That's just my principle. So.
Got you. And we talk about, I know people talk typically about short-term investing versus long-term investing. Would you say that stocks are a long-term investment, or what's a short-term investment that for people who are interested in making profit on a consistent basis?
Well, I'll give you an example of a short-term investing. And I don't do a lot of short-term investing, but if I have a client that's interested in taking a certain amount of risk on a short-term basis, there would be kind of a company that is up and coming, or you're trying to capitalize on a trend in the market. One of those trends I took advantage of was the Weight Watchers stock. Now, Weight Watchers is a known company, but when they announced that Oprah Winfrey was part owner of that, and it was only it was only like $11 a share. I was thinking, okay, then this is probably going to be a good investment.
Exactly.
And of course, the stock was really moving up and moving. But I wasn't in it for the long term. I figured that this is something that's really, just based on how it was trading, you're saying this is a year of breakthroughs. I figured it was going to really break through and break out. So, we were able to double our money in it in maybe just a few months.
That's good.
But there were some people, though, who were like, oh, I want to continue to hold it. I said, well, I don't know if I would do that. The stock went from maybe $10 to about $100.
Oh, wow.
Over a year and a couple months. But if you didn't sell it, because it was a short-term investment. If you didn't sell it, the stock went back down to about $20, $30.
Yeah.
So that's the short-term investing. So you're investing kind of on a trend, because everybody was talking about Oprah, owning the company and that, so, and everybody was saying, oh, there was a lot of what you call short sellers.
Yeah.
Meaning that they didn't think that Oprah was going to be able to really move that company along. So they were selling the stock instead of buying it, because you can make money if you sell it and not buy it, because if it goes down, you make money. So all these short sellers were in there, but I said, no, I think Oprah's really going to do something with this. And so so we went against the trend, and just kind of, it was a short-term thing, but we made money and then got out. Okay. So, but Microsoft, I wouldn't consider that a short-term investment. It's a long-term, I think, investment, because that's where technology is kind of where it's at today. Okay. And I think long-term, of course, Microsoft will be here.
Okay. Can you explain a bit more about when the market is, I've heard terms like bullish or bearish. What does that mean?
It's a season. As Christians, we have seasons that we go through things where things may be coming against us, or maybe we're just, really prospering and things are going great. And the market has seasons.
Okay.
A bull market is when stocks are going up over time. A bear market is when stocks are going down. So generally, if the market is down 20% from its highs, that's considered like a bear.
Okay. What would you say the current market is as of today? Where
Well,
are we currently?
we're near the high, so it's not. We've had some heavy down days, but when you see the market down 1,000 points, maybe 20 years ago that was a big deal. But when the market's at 25,000, or where the level that it's at now, that's not a big drop.
Okay.
So I think we're still in a good upward trend.
I think this is awesome. I think this is excellent information, everybody. For those of you who may be interested in learning more about investments, definitely feel free to look up Miss Catrice Wells. I think that she'll provide some valuable information in guiding you with your investments. This is really good. I understand that there was a very memorable event that occurred in 2001 with you. Can you share a bit about what happened?
Oh, that was 9/11. I've always been, just wanting to be a part of Wall Street, and I was going to go to New York. I had a job offer. One of my friends, Andre, he was working at the World Trade Center, and we were training together, and we were actually trained in San Antonio, Texas for Citibank.
Okay.
And so he said, you should come join our team in New York, because I was excited about being on Wall Street, and he was at the World Trade Center. And so we got interviews together, and I got a job offer, 6-figure job offer, to go work with him on a team in New York. And so I had even found an apartment. It was hard to find an apartment in New York, but found an apartment. We had faxed over the lease and all that. But the Lord just spoke to my heart that something was getting ready to happen in New York, that I would be in the middle of it, and it would be world-changing. I didn't understand it. My church had prayed for me, and I had some going-away parties and things like that, and I was prepared to move. So I decided to stay, but I couldn't explain it. So I left a message with those in New York to say I wasn't going to come. I thought maybe I'm just being a little bit too deep here, because this is such an opportunity. And so I stayed here in Chicago. And then on that Tuesday, when my old job had said, you can come back anytime. And so, because I had turned down the job, in New York. So I went back, and when I saw that World Trade Center come down, after the 9/11 attacks, because my start date was the first week of September of 2001, the week before 9/11.
Wait a minute. Wait a minute. Let's backtrack. So are you telling me you were supposed to be actually working for the World Trade Center?
Yes.
And the Lord spoke to you and told you to not go in, even though you had a 6-figure job offer, and you heard the voice of the Lord and avoided a calamity of actually being one of the people whose lives were taken on that day?
Yeah, many thought I was actually there.
Oh my goodness.
When it happened, and 'cause I only told my mom and my grandmother what the Lord, I felt the Lord was saying. And Andre, who got me the job, he was on the 102nd floor of Tower 1.
Wow.
And all 4 people on the team perished, and they never found their bodies. So, and I was calling him that day, and of course the phones were out. But so I just thank God for leading and guiding me. I learned to don't follow money, but follow God.
Wow.
And then the goodness and mercy will follow you.
Wow. And so this is good. I think what you just said, it brings up a very valid point. So even in the topic of investing, hearing the voice of God is essential in this. So whether it's short-term investing or even long-term investing, can you talk a bit about how your faith plays an impact on what you do as far as even investing for yourself or your clients?
There have been, I try to really invoke God into what I would buy and for clients. And there have been times when the Lord has spoken to me. It's not all the time. Every time I buy a stock, it's not because the Lord told me. But there have been instances where the Lord has really guided me on what to purchase. And so I'm grateful for that. As Christians, we have inside information.
Yes, yes, and that's through the Holy Ghost.
That's right.
The Holy Ghost. He's your teacher and your helper.
Yes.
Yes.
So,
well, this is really good. I mean, Ms. Wells, I'm so glad that you had the opportunity to come onto our show. I mean, someone of your expertise and the pedigree that you have, having over 25 years of experience in the industry. But I think what's the most essential thing that we can take away from this podcast is not only are you were just a head stock trader, or that you've held such high titles for yourself within this industry, but that you're a woman who hears the voice of God.
Yes.
Even in your industry, you use faith principles in order to guide you to make the right investment for your clients and to even lead them to success and profit. I think that alone is the word of the day.
Yes, yeah. The Lord will lead and guide you, you know. And we can use it as Christians. You know, I remember one time I was kind of, a client wanted me to buy something a little more risky and take on a little more risk. They wanted to just try that. They were in a good financial situation. So I said, well, you know, I asked the Lord to really just kind of guide me. And I wasn't sure whether or not it was a good time to buy or sell this particular stock. It was an oil company. Mm-hmm. And, you know, one night the Lord allowed me to see the cover of a newspaper about oil stocks. And so I made a decision on that. And I saw the price of the stock move in this dream.
Wow.
And so I made a decision based on that, and it was right. And I think just within just a 2 days' time, we were up like 40%.
That's awesome.
Yeah, so that doesn't happen every day, no.
That's awesome.
But, you know, the Lord will be there with you, and we're as Christians, we do have a great advantage.
That's awesome. If you didn't hear, make sure you hear the voice of God. And if you haven't done so already, make sure you look up Miss Catrice Wells online and pick up this book, When Heaven Went Public. I'm sure you'll enjoy this read. Miss Wells, I want to thank you so much for coming onto our podcast.
Thanks for
It's
having
surely
me.
been a pleasure. The information that you've provided for us, it's definitely an on-time word and surely powerful. I'm pumped. I'll be implementing a lot of this in my own personal life. I hope that you'll come back on our podcast in the future, because I think there's a bit more that I want to pull out of you with regards to investing. I'm sure that there will be more questions that'll come pouring in from our audience. If you are audience and you're here, you've tuned into this podcast, make sure you submit your questions. We want to hear from you. On our next podcast, we'll be discussing real estate, how to own it, how to buy it, how to sell it. For this podcast, we'll be bringing a team of experts. So remember, submit your questions to moneymondays@jbs.edu. But not only that, submit your questions about any money topic, whether you may have questions for Miss Catrice Wells about investing and you want a little bit more information. Make sure you do that. In closing, don't forget to join us every first and third Monday of the month at noon, Central Standard Time. I am your host, Jill Thompson, and thank you so much for tuning in again to our Money Mondays episode, and I look forward to seeing you prosper. We want to hear from you. On our next podcast, we'll be talking real estate, the real estate, how to own it, how to buy it, how to sell it. We are bringing a team of experts. Submit your questions in advance to moneymondays@jbs.edu. Again, that's moneymondays@jbs.edu. Don't forget to join us every first and third Monday at noon for a new topic on money management and wealth creation. Subscribe to our Joseph Business School YouTube channel. And as always, I'm your host, Jill Thompson, and I look forward to being with you on our next time and to seeing you prosper.